Ladies and gentlemen, as we are about to commence with the proceedings for this evening, may I warmly invite everyone to come and take their seats, please. Thank you.
In the world of investments, trust is earned. Success is built on insight, discipline, and strong partnerships. At LOLC Securities Limited, we don't just participate in the market, we help shape financial success. As a fully owned subsidiary of LOLC Holdings PLC, our journey began in 2011 with a clear ambition to redefine excellence in Sri Lanka's stock brokering industry. With 15 years of industry expertise, we stand today as a premier stock brokering institution in the country. Built on credibility, analytical strength, and enduring client relationships. With an expanding presence across Sri Lanka, including our branches in Kurunegala, Anuradhapura and Matara, we bring capital market access closer to investors across the island, connecting opportunity with ambition. Guided by a distinguished board of directors and driven by dynamic executive leadership, the organization moves forward with strategic clarity, strong governance and long-term vision. At the forefront of our operations is our team of experienced investment advisors, professionals who understand that every portfolio reflects a purpose, whether it is wealth creation, capital preservation, or long-term financial security. As specialists in stock brokering and investment advisory, we deliver tailored portfolio management strategies aligned with each client's financial goals, risk tolerance, and prevailing market conditions. Regular consultations, timely market updates, and transparent performance reporting ensure that our clients remain informed, engaged, and confident in their decisions. Supporting this advisory strength is our dedicated research team. Through detailed market analysis, macroeconomic evaluations, sector insights, and structured valuation methodologies, our analysts deliver comprehensive intelligence designed to bring clarity to complex market environments. In capital markets, clarity drives conviction. Our commitment to excellence has been consistently recognized on both national and international platforms. Over the years, we have received multiple accolades at the CFA Capital Market Awards and global industry recognitions, reflecting our consistent analytical discipline and advisory excellence. Most recently, in 2025, we were honored with the Silver Award for Best Website This recognition underscores our continued investment in modernization, digital accessibility, and delivering a seamless experience for investors engaging with our insights. A platform designed not just to inform but to empower. In today's fast-moving financial landscape, access to timely insight is critical. Beyond direct advisory engagement, we extend our research and market intelligence across multiple digital platforms with particular strength on WhatsApp and YouTube alongside Instagram and Facebook. We deliver real-time research highlights, market alerts, and strategic insights directly to our investor network. Our strength lies in our people, professionals with deep market expertise, disciplined judgment, and an unwavering commitment to client success. LOLC Securities Limited. Insight, discipline, performance.
Good evening, ladies and gentlemen. A very warm welcome to all of you, and thank you very much for being here with us this evening. On behalf of LOLC Securities, it is my privilege to welcome all of you to Investor Forum 2026, a platform that has been designed to bring together insight, policy perspective, and market intelligence at a moment when clarity and confidence matter the most. We are honored this evening by the presence of policymakers, market leaders, institutional and individual investors, members of the corporate community, and distinguished guests who play a vital role in shaping Sri Lanka's economic and capital market future. Tonight's program, ladies and gentlemen, has been very carefully curated to offer you strategic perspective, data-driven analysis, and thoughtful dialogue, all with a clear focus on what lies ahead of you. To formally commence today's proceedings, may I now invite Mr. Shahan Bartholomews, Chief Executive Officer of LOLC Securities, to deliver the welcome address.
Good evening. Honorable Chaturanga Abesinghe, Deputy Minister of Industry and Entrepreneurship Development, Mr. Mangala Vijayasinghe, Chairman and Chief Executive Officer of the Sri Lanka Export Development Board, Mr. Asanka Herath, CEO, Unit Trust and Head of Equities at Linear Wealth Management, Mr. Kitsiri Gunawardena, Director of LOLC Securities. Distinguished guests, ladies and gentlemen, it is a great pleasure to welcome all of you to the evening to the inaugural Investor Forum organized by LOLC Securities. Investor confidence and informed decision-making are the foundation of any strong capital market. As Sri Lanka continues its journey towards economic stability and growth, the role of investors and the strength of our capital market becomes even more important. Events such as this forum are part of our effort to create a platform where investors can engage, learn, and better understand evolving market landscape. In today's world, capital markets are influenced by a wide range of rapidly evolving factors, both internal and external. Corporate earnings may change due to developments within the companies. Entire sectors can experience disruptions. Economies themselves may face turbulence, as Sri Lanka we faced during the events in 2022. Beyond this, there are global developments outside of our control, such as geopolitical tensions we are witnessing today in West Asia. In such environment, the key question for all of us as capital market participants is, how do we assess these developments? And how do we interpret their impact on markets and investments for informed investment decisions? Dear investors, it has become more important than ever for investors to stay informed, to understand the flow of market information, and to carefully evaluate the risk-reward dynamics in order to identify opportunities while managing risk. For the past 15 years, LOLC Securities has remained committed supporting investors through education, professional guidance, and reliable service. Our goal has always been to help our clients to navigate market with confidence and pursue sustainable long-term growth. In line with that commitment, we are pleased to launch this series of investor forums, which we intend to develop as a long-term platform to empower investors through knowledge, dialogue, and engagement. Once again, I warmly welcome Honorable Deputy Minister Chaturanga Abesinghe, our distinguished panelists, members of our board, and all our valued investors who have joined us in this evening. Thank you for being here. I hope today's discussion will provide valuable insights, perspectives as we continue to build more informed, confident, resilient investor community in Sri Lanka. I wish you all a productive and insightful forum. Thank you very much.
Thank you very much, Mr. Bartholomews. Ladies and gentlemen, for investors and stakeholders, decisions are increasingly shaped by the broader economic and policy environment, and understand this context is vital for all of you. It is therefore an honor to invite a policymaker who brings both technical expertise and reform-oriented perspective to economic and industrial development. May I now invite Honorable Chaturanga Abesinghe, Deputy Minister of Industry and Entrepreneurship Development of the Government of Sri Lanka, to deliver the economic outlook.
Good evening, ladies and gentlemen. It gives me great pleasure to be in front of you to represent the government of Sri Lanka, to give you confidence in building our capital markets further. Chairman, Board of Directors of LOLC Securities, distinguished panelists who are here, representatives from regulatory bodies, Sri Lanka Stock Exchange and Securities Exchange Commission, and members of the media and the investors, the potential investors who are here. So we now understand uncertainty is the certainty. So that's what we have to admit and move on. So Sri Lanka has been going through various difficulties in various phases, but we have been resilient. I think that's the key trait of Sri Lanka. And today the entire world talks about being neutral and being humanitarian. I think the decisions that we took last few days has put Sri Lanka also on top of the global map as well. So as Sri Lankans, humility, kindness, and hope has been always there, and we have always been resilient to come out of various problems we had to face both internally and externally. So I was asked to share some thoughts on the current economic condition, and probably I'll talk a little bit about the today's situation as well. So before that, I would have been part of you guys if I pursued my original career. So I did finance at University of Sri Jayawardenepura, started doing CFA, and did 2 levels, and then felt operations is much interesting than managing somebody's wealth. So I shifted to operations, but those days I was thinking to join a stock brokering firm or Moody's, or all these global stock management, wealth management organ. That was my university dream. But then things changed, and today here I'm talking to you as a Deputy Minister for Industries in the government. And another reason that I wanted to be part of this is that one of the greatest barriers for industrialization in Sri Lanka is lack of capital. Actually, it's not lack of capital, it's lack of knowledge about capital. I would say 90% of our industrialists have not sought capital market as a source of capital for their growth. Therefore, we face a lot of difficulties as industries because their balance sheets are full of debt. Sometimes I tell them your business is owned by the bank. So when some crisis happen, don't blame the bank because it's already owned by the bank, because the balance sheet is too geared to debt and they have not raised capital. So therefore, from Ministry of Industries perspective also, my plan is to drive about 100 new institutions into the stock market within next 2 to 3 years. Because that's how country would grow. That's how we would make global companies. That's how we will get strong entities that can carry Sri Lankan brands across. We have seen examples of the listed companies over the last 10 years, how they have performed. And we are happy to say the current stock market performance is reflective of its assets. We had certain eras that doubts whether the stock market really reflects the value of the underlying assets. But we can see on ground, these institutions, both all the sectors, especially finance, tourism, and even agricultural, some of the listed companies are doing extremely well. We can tangibly see them growing. And in terms of the economic position, that all of us are very interested to understand how we recovered and are we going to sustain. For that, we need to first understand and admit why we got bankrupt. Without that, I don't think anything that we do as changes for the last few years is going to make sense. Sri Lanka had two problems. The biggest problem was the continuing fiscal deficit, unbearable fiscal deficit. And if someone asks me why, one would say it's corruption. No, it was not corruption only. Corruption comes because of utilization of resources, and corruption drives things that to misuse of funds. But what really happened was we failed in collecting taxes. In 1990, we were collecting 20% of our GDP as our taxes. By the time we collapsed, that is 2019, we were only collecting 8.5% of GDP as our taxes. So we continue to have a large deficit. For that deficit, then governments continue to borrow from local market. So that is why the stock market did not grow. So today what you are seeing for the last year's growth, mainly due to a stable government which is not borrowing excessively from the local market. And the government treasury bills and bonds are yielding about 8%. So sometimes you feel it's not a good yield. So where would you park your money? So that is why there's more liquidity in the stock market. So continually we had that problem. By 2015, then government and the experts of finance, call themselves experts, went to ISBs, borrowed at 7%. And you are guys who are doing predictions, LOLC and all these analysts who are there. I didn't see any analyst predicting that we are bankrupting by 2020. Any analyst can predict that. But since it was not your job was to give confidence, nobody predicted that in public. But as people who are interested in politics and country, we knew we are going to collapse. That is why we built National People's Power in 2015. We were forecasting the collapse. Because there was no chance Sri Lanka was going to pay $4.5 billion a year from 2020. That was the first issue. And in order to, on top of that, we had a continuous trade imbalance. So the trade account was expanding and the external resources were depleting. So these two variables were the problems. So what did we do over the last few years with the IMF program? We disciplined the government, started collecting revenue more methodically and rigorously, rationalized the expenditure for priority sectors and ensured that we have a primary surplus. So now things are stable, right? So there is no way that Sri Lanka is going to collapse financially going forward. Why? Our fiscal discipline is enacted. And you have a government who's disciplined, and we have shown you over 1.5 years how disciplined we are, being able to be within the budget, being able to collect our revenues. So there will not be any problem in the fiscal space going forward. And therefore, government will not borrow excessively, funds will come to the stock market. So you will have ample liquidity going forward. right? And on the other side, we see the variables that can take us out of this crisis, which is exports. We have the Export Development Board chairman here who's driving exports for the country with his team. We are expecting a 10% continuous growth. So we've achieved 17.2 billion last year, which is probably the highest in our history. And we are keep growing. And this January, we have a 13% growth than last January. Tourism is growing. Remittances have gone beyond 8.1 billion. FDIs have crossed 1.2 billion only on BOI, but beyond that we will get more FDIs through Port City as well. So we will be basically crossing more than 2 billion a year going forward. So when you forecast these numbers, for the next 5 years, foreseeable future, our debt repayment is below $3.5 billion. So last year we serviced $3.9 billion. This year only $2.7 billion. Going forward, it will be 3.5 or below up until 2032. So as an investor, what more do you want? You have your macroeconomy predicted. Fiscal deficit is predicted. Inflation is predicted. Interest rate can be predicted. Exchange rate is going on market demand and supply. It's depreciating at the right rate. What else would you need to assume now? So now you have to look at the real assets, the growth sectors of the country, and keep investing because it's going to grow, right? So therefore, we don't see any risk at this point, given the current trajectory, that Sri Lanka will fail in again. So we now have a triple C. We are expecting a B minus by end of this year. So it will allow foreign capital to also flow into our market. So therefore, we are in a good position. And there is, all the indicators are directing towards that, where government is making significant changes beyond governance. Sometimes people see this government is, we will all admit that this government will not get corrupt or will not do corruption. That is not enough to reform. We have missed reforms for 20 years. We've now enacted the new trade policy or the tariff policy, which is 20 years late. We know it's tough, but we are going for it. We've made significant changes in certain other reforms like land, investment policy. There's a PPP Act that's going to come. Strategic Investment Act is clear. Port City Act has been amended. So going forward, there will not be any ambiguity for investments because it's on a rule-based methodology. It's been clearly crafted out what will be the incentives, what are the priority sectors, and we see certain sectors are booming. And there will be more and more. On the other side, you are seeing, first time in the history, a digital transformation is tangibly happening. Was there any point that we thought that we could pay our, when we are copped somewhere in Anuradhapura or Tambuttegama or in Monaragala, that we can take our license back and come to Colombo? Now you can pay it online. Every transaction in the government is going to be digital by end of next year. Each of the government services will go on digital to processes. So that will reduce the amount of touch points that you will have to interact with government officials. Just before this session, we were having a chat, this government is slow. Yes, because we work on rules. If you don't want to work on rules, we can go back to the old system. You call the minister, minister call the officer, officer will do the things. We are not doing like that. So we have to amend acts which are old as 1918. Did you know that the act that enables business registration in this country goes back to 1918? The amendment that has come was lastly on 1987. So for a person to register a business, you need to submit more than 15 documents. Now we agreed last week to bring it to one document. You just have to prove your address, you will get the business registration within 2 days. So these are fundamental changes. That has never happened. We will all get a digital ID next year, which never happened. We will get a single window for investment within next few years. We will get a single window for trade within next few years. Inland revenue is going through transformation. Customs is going through a it's painful. It'll take time because it has never happened. People are resisting. Do you like to change? None of us are willing to change. Are we willing to change our diet? Are we willing to change and walk or run every day or at least 3 times a day? Change is difficult. So you expect a 1.3 million government service that has been there for 20 years is going to change just because a new government came? It's not going to happen. It's painful, but we are doing it. So with all these changes, we see there's a great opportunity for business, great opportunity for investments. And that is why, as a government, we are also pushing stock market as the source of equity. So there will be more and more organizations listing. The listed companies will be moving into various securities like debentures, green bonds, orange bonds, sukuks, whatever. I mean, I don't know how many instruments you will bring, but the Securities and Exchange Commission and the stock exchange is working very hard on these things. And there will be more institutional global investors coming in. Port City will be booming. Maybe in future we can have a futures exchange. I don't know, commodity exchange. Sri Lanka will be the hub. Look at how we are playing. We brought Pakistan and India to play in here. We brought an Iranian naval ship safely to our shores. We've been politically neutral. And that's going to help us immensely to become the next transformation of the region. If it was Dubai, if it was Saudi for the last 10 years, we have the opportunity now. Because everybody across the world would see Sri Lanka as the place that they can interact with the entire world. We can trade with any government. We can trade with any nation. We will have multiple trade agreements coming in next few years, which has never happened. We only have 3 trade agreements which are in existence: India, Pakistan, and Bangladesh. Trade what? We have GSP plus with Europe. Luckily, we are surviving with US. We just got free access to UK. But we have to get access to our region, Africa's, East Asia's. So we are working very hard on trade agreements. So therefore, Sri Lanka is going to be the hub for many. And you are also seeing Colombo is lit up every weekend or every night with hundreds of events because it's becoming the hub for events as well. So therefore, we see a lot of prospect. And I think the GDP growth is expected to go surpass 5. So that's the government's expectation, but being cautious, we have predicted that 5%. And then the sectors you see, when I said the dollar income earning sectors are booming. And apart from that, there are other sectors which are growing, like electronic manufacturing is doing very well. Agriculture, value-added agriculture is doing very well. Boat building industry is doing very well. Technology, the digital services economy is going very much because there's a focused attention under the president with the support of Dr. Hans. So there's so much of opportunity, and we want to bring all that opportunity into the stock market. So that is how the opportunities will reflect its real value, no? So there's a lot of work to be done on that side. And I think existing situation, so we all need to know, we have not covered our corners of security. As a country, we are always fragile because we are not a country that has free access to energy. So we had to build our capacity. If you have listened or read last 2 days, you would have heard that government is investing 47 billion rupees in building infrastructure capacity to hold more fuel and, have energy security. We are working very hard to transform agriculture sector so that we will have food security. We are working very hard in domestic medicine manufacturing, so we will have health security. So this country has basically done nothing for the last 30 years to have a sovereign, secure nation. So that is happening on the side. And I can tell you, the turbulences that we go through will happen. So this is how the world works. It will go in cycles. At this point, we don't predict a World War III. So we will see of this space. We will have turbulences. We are threatened with various sectors. We will see a dip in tourism. We will see hikes in prices. That is a global thing. It's nothing to do with us. It will happen across the world. Consumption might come down across globe. Investments might be a little slow because of the uncertainty that is being posed. So however, I think these things will tail off by end of this year. So for the first quarter, we will have some turbulences. So we will have to catch up within the next 3 quarters. As a government, we are not changing the budget. Even with DITWA, we didn't change the budget. We were strong enough to manage that because we had 500 billion disposable cash. So by strength to strength, the government has enough resources to cover these risks. For the industries, we have fuel security or energy security for the next 3 to 4 months. And the fuel, the vessels are planned up to April, so there is no threat there. We are getting energy vessels from India and Singapore, and they have these are refined oil. And for our crude oil need also, we have orders placed up to April, and they have committed that those will be delivered. So I think apart from that, what we will see is actions that the government would take based on a very careful analysis of how things happen across the world. There are alternatives, there are alternative methods, alternative ways of managing the country, and we will trigger them as it comes. And don't get carried away with false information. That's my request. So as stockbrokers, people who predict and forecast the economy and stocks, you need to be able to share the right information with the public as well. Because so much of false information running through, right? We know for few, right? Because when this government came in, people said within 3 months there will be queues. And few months IMF will run away. Few months the government will fail. This is the uncertainty unwantedly being predicted when we are on a very strong growth trajectory. And from the government perspective, we can tell you, we will ensure this discipline of governance will continue even beyond the IMF program. We are using IMF program as a learning tool, a framework, so that we can strengthen ourselves and be better as we move forward. And we are making changes that will have structural impact for the next 20 to 30 years. We are making a significant change in education, which is going to fuel our growth. We are going through a huge technological transformation that we have not witnessed as Sri Lankans. So therefore, I would like to end my initial remarks with this, and we have to stay positive. We have been resilient, and the public and the investment fraternity has to be working hand in hand with the government. We have no other intention to make this country better. We have no other intention to get 27% of our population out of poverty. Those are the two things. And we will ensure law is above all. And these 3 promises is what we made when we came into power, and we will continue to do so. And wish all of you all very best. And encourage entire industrialists to be part of the stock market and show the benefits of the stock market. Whilst you educate the investors, please do educate the private companies what benefits they will have when they list. When they list, they don't need collateral for borrowing. They can issue debentures. When they list, they don't have to be limited to a single borrower limit. When they list, they can be global within a week. So with this, I end my remarks for the session and have a great evening. Thank you.
Thank you, Honorable Deputy Minister, for those very insightful remarks. Ladies and gentlemen, turning now to the capital markets, an area where timely analysis as well as informed interpretation are both very essential. We are very pleased to bring to you an update grounded in research and market intelligence. I now invite Ms. Ruvini Kaushalya, Senior Manager of Research at LOLC Securities, to present the stock market update.
Very good evening, ladies and gentlemen. Well, our theme is capitalizing on the economic upswing. Well, you know that in investing, there's a signal that, and there's a noise. Recent event, this 3rd March, illustrate this perfectly, that we saw the noise, the external shock and panic dominated the stock market. The SPI plunged 1,290 points, that is 5.4% in a single session amid escalation in this Middle East, Israel and Iran war, and that's triggering circuit breakers and heavy trading volumes. This knee-jerk reaction was driven by headline risk, but not by changes in our economic fundamentals, you know. But the signal, the underlying improvement in Sri Lanka macroeconomic foundation and the corporate earnings remain intact. Well, if you can see in this presentation, we've seen the macro stabilization. And back in 2022, we faced the severe economic crisis, and then we have to engage with the IMF program, and with the strong fiscal and fundamental reforms, as a country, we were able to gain the momentum. With improved economic condition, we have seen the GDP growth improved and also inflation intact. We were at a very high level of inflation, with inflation shot up to 70%, and then with correct policy decision making, and with the correct monetary policy decision making, we've seen that the inflation levels we were able to bring down, and also the currency exchange rate also now stabilized, and we expect currency to depreciate further. And also, if you look at the earnings recovery, so we've seen most of the listed entities, they've showed a strong growth momentum in the earnings because of the strong improvement in the economic conditions. The revenue lines improved because of the demand condition, improved consumer spending, and also with the lower interest rate environment, most of the companies' finance cost came down. With that, the profitability level improved. With that, we have seen in the market, the corporate earnings levels improved. And also we know we are susceptible to the external shocks. That is why we saw in recent history, the beginning of this week, the market reacted to the external shock. That we have to be mindful with these risk factors when we are investing in stock market. Well, this is the ASPI trend navigation from 2025 onwards. You can see in 2025, the market saw a strong growth trajectory, especially soon after the presidential election. You know, earlier investors played sideways because of this uncertainty in the political environment. But soon after the presidential election, we saw strong growth in the stock market. That is, that political stability is there. That is one key reason investors earlier took sideways, and then with the improved the political stability is there, and also we have seen the key catalysts that the market increased because of few key reasons. That is mainly the interest rate environment. The interest rate came down, and with that, most of the investors, they looked at different alternative opportunities rather than depositing their money in the banks. So then stock markets look so lucrative, and that time the market has collapsed. Back in 2022, market came down, and the valuations, the companies, the people who have ample of companies to invest in the market, because of that strong fundamentals, most of the companies were undervalued that time. So especially the banking sector counters saw a strong growth momentum because of this reason. You know, in we were able to complete the external debt restructuring. With that, the banking sector showed a strong rally, and people have ample of stocks to invest in a stock market with a strong growth. And if you look at the forecast, that time we forecasted that the economy is growing. The most of the stocks were undervalued. That is why investors came into the market and invest in a stock market. That you can see soon after the presidential election, the market rallied. That momentum was there till 2025. You can see and also the markets are very susceptible to the external shocks. That you can see when Donald Trump announced the reciprocal tariffs, then the market reacts. That is not only in Sri Lanka. All the global markets reacts to this. So in such cases, markets are susceptible that we cannot predict those external shocks. But as a country, we've seen now almost all the sectors that we can do the prediction, because most of the decisions are made based on the data. So that data is available. So you can do the prediction at this current environment, especially now the central bank, they're providing data to they have a monetary policy framework, and you will be able to do your analysis based on your data. So 2026 also that market showed a strong upward movement. However, you can see the recently market came down because of this Iran-Israel attack. Well, this is the trends in market performance from 2022 up to date that you can see. In 2020, SPI was at 6,774 levels, and now we are trading at 22,701 levels. The market showed a strong upward momentum during this period. However, the market is leading. You can see that the market reflects the economy. In 2022, we faced the economic crisis, and you can see 2022 stock market dropped by 30.6%. That is from 2021 up. That during 2020, actually, that was the pandemic time, and we banned a lot of imports. Therefore, we saw a lot of money came into the market. That is why there was so much of a liquidity in the market, and the market gained momentum back in 2021. That market rallied 80.5% from 6,774 to 12,126 in 2021. And then with the severe economic crisis, market came down with the strong fiscal reforms and the corrective monetary policy decisions. Then again we were on the right track, and the market witnessed strong momentum 2023 onwards to now. So you can see the turnover levels improved from 2020 to 2020, 1.8 billion turnover. Now you can see the average market turnover is 6.3 billion. A strong growth in the turnover levels, and people invest in the stock market because this is one of the best alternative investment opportunities that anyone can have. And also, we have seen that the foreign purchases have come. The Sri Lanka was the stock market is a net. We witnessed a net foreign outflow during last 3-year period, like 2024 to up to now. But going forward, if we upgrade our as Deputy Minister mentioned, that we are going to upgrade, if we receive the upgrade in our country credit rating, then foreign funds will flow into the Sri Lanka. So going forward, we will be able to see more investors coming into the market under that condition that we need to upgrade. We need to have the upgrade in our credit rating. Well, market capitalization also improved. You can see from 2020 to 2026 level, it has improved from 2.9 trillion to 7.6 trillion up to date. Well, moving on to the next phase, that yes, we discussed that the macro stabilization, the GDP growth rate that we focused like during this 2025, the GDP growth rate can be stay around 4.5 to 5% level, and our currency is now stabilized. But with this global tension is there, crude oil prices have increased. Our import bill, when the crude oil prices increase, we have to, when we are importing crude oil, we have to pay more dollars, and with that we expect exchange rate depreciation, and inflation is cooling, and the central bank is targeting 5% inflation level up the first half of 2026, that is to reach. Well, inflation also can pick up with this current the global economic shocks, that with the crude oil price increase, that will eventually increase the price levels. With that, inflation can also pick up. And also interest rates are cooling. So with this low interest rate environment, we can predict that the stock market is still lucrative. It's lucrative that investors can invest because of this lower interest rate environment. Moving on to the next slide, that the corporate earnings momentum, as I mentioned earlier, with this improved economic conditions, the demand level improved, the top line grew in the market, and most of the companies, they were able to improve their cost efficiencies, and also they improve the margins. Then also with this lower interest rate environment, finance cost has come down, and then the profitability levels of the listed entities have improved. This is the valuation scenario. You can see now if you look at the current PE levels, we are back to pre-COVID level. This actually, if you look at 2022 dip, that you can see after that market gained the momentum purely because of the fundamental driven. The companies, the prices is increased purely because of the fund, by looking at the fundamentals, not because of some speculation or the fundamentally strong counters, so strong growth in the momentum. That is why now we are at the peak pre-COVID level, and we are expecting the PE level, the PE level to be around 12 times this year, and price to book levels also now quite big, have quite increased from 2022 onwards. Still, there's a growth potential in the market by looking at the valuation conditions. If you look at the peer conditions, you can see that Sri Lanka is trading at a discount to the regional peers, where we have the more room to improve our markets, because of by looking at the regional countries markets, we are still trading at a discount. And the strategic allocation, if you look at the counters, that we strongly believe the financial sector, especially banks, NBFI and real estate sectors to do well, especially with this lower interest rate environment, the banking, the credit growth can pick up. With that, net interest income can grow up. However, the net interest margins can shrink with this lower interest rate environment, and also fee and commission income we expect to increase. However, with this Middle East tension, remittances flow can come down, so that is having an impact to the non-interest income component of the banking sector. Well, and also with the improved credit quality, impairment charges can bring down, and we expect profitability to improve in this banks and NBFI sector. And also, if you look at the capital goods, the sector comprise a lot of stocks like the construction, diversified. These companies are up into the capital goods sector, where you can see especially PMI construction index improved, and also all the other leading economic indicators are improving. With that, we believe construction sector activities to pick up, especially, and also the material sector counters can also can improve with this improved construction activities. You know, this it was cyclone, and we have to do the rebuilding part. With that, we expect construction sector activities to pick up, and also we believe with the current government, and also that we will be able to do more exports, and the export oriented counters also can have a benefit. And also we have to look at the defensive stocks, that is mostly the conglomerates. These conglomerates have the because of the defensive nature, we expect these conglomerates to perform well. So by looking at that, and we have to look at the risk factors when you're investing in stock market. So we are very susceptible to the global geopolitical tension. So external shocks that directly affect to the market. If you look at the interest rate risk, with this, if the crude oil prices go up, then we have to look at our external sector, where the currency have a pressure on it, and we expect currency to depreciate with that, and we are having a very easing monetary, we are in a easing monetary policy cycle. However, if the pressure is high, then we might be able to see a small increase in the interest rate. And also, as I mentioned earlier, also exchange rate risk is there with this current economic environment. Inflation can remain at 5% level, and I think the government front, they have done a lot of fiscal reforms, especially with the engagement with the IMF program. That is positive in this scenario. So finally, I wanted to tell that still the companies, the fundamentally strong counters are there. So the economic looks promising. You have to look at the long-term value opportunities, and with that you can invest in stock market. So that is the final conclusion of my presentation. Thank you very much.
Thank you very much, Ms. Kaushalya. Ladies and gentlemen, we now move to the centerpiece of this evening, a panel discussion that brings together policy leadership, market regulation, export and enterprise strategy, as well as investment management. Allow me to now introduce our distinguished panelists. First, Honorable Chaturanga Abe Singha, Deputy Minister of Industry and Entrepreneurship Development, whose policy perspective will anchor today's discussion in national priorities and reform. Elected to Parliament in 2024, representing the Colombo district from Kotte, the Honorable Deputy Minister holds a BSc Special in Finance from the University of Sri Jayawardhanapura and is a fellow member of CIMA UK. With over 16 years of professional experience spanning finance, data science, HR analytics, and digital transformation, he is a strong advocate for data-driven policymaking and entrepreneurship-led industrial growth. Honorable Deputy Minister, please join us on stage. Thank you very much. Also, ladies and gentlemen, joining the panel this evening is Mr. Mangala Vijay Singha, Chairman and Chief Executive Officer of the Export Development Board of Sri Lanka. Now, a senior corporate leader with over 25 years of experience across multiple industries, Mr. Vijay Singha brings a strong strategic lens to discussions on exports, competitiveness, and market access. May I now invite Mr. Vijay Singha also to join us on stage. Thank you. We are also pleased to have with us Mr. Asanka Herath, Chief Executive Officer, Unit Trusts and Head of Equities at Linear Wealth Management, who contributes a practitioner's view from the investment management and equities space. Now, Mr. Herath has over 18 years of experience in investment management and research. For the past 12 years, he has helped shape Linear, building its equity and unit trusts platforms, managing large portfolios, leading research, and advising clients on how to optimize their investment returns. Now, before joining Linear, he spent 6 years in sell-side research, covering multiple regions as well as sectors. Mr. Herath also brings a multidisciplinary background to today's discussion in economics, econometrics, finance, as well as law. I now invite Mr. Herath to join us on stage as well. Thank you. Ladies and gentlemen, up next is Mr. Shehan Bartholomeus, Chief Executive Officer of LOLC Securities. Mr. Bartholomeus has over 18 years of experience in M&A, deal structuring, corporate strategy, buy-side research, sell-side research, commodity trading, as well as portfolio management. He has spearheaded the LOLC Group's global expansion since 2017 by strategizing the entry to new markets. Now, prior to joining the LOLC Group's strategy team, Mr. Bartholomeus headed the research division of LOLC Securities and the group's investment advisory firm, LOLC Capital One Limited. Prior to joining the LOLC Group, he worked at Expo Lanka Holdings PLC, Sri Lanka, managing gold trading as well as equity portfolio. He also advised the company on listing in the Colombo Stock Exchange. Mr. Bartholomews is a renowned equity analyst in Sri Lanka, featuring in media and public forums in Sri Lanka related to capital markets. His research won the gold for Best Equity Research Report at CFA Capital Market Awards in the year 2015. Mr. Bartholomews, I invite you to join us on stage. Thank you. And moderating this discussion this evening is a voice very well known to Sri Lanka's business community, Mr. Nistar Qasim, Chief Executive Officer and Editor of Daily FT, whose depth of insight and sharp moderation will certainly promise a stimulating exchange this evening. Ladies and gentlemen, please join me in welcoming our panel. And Mr. Qasim, over to you.
Thank you very much. It's always a pleasure to moderate a panel with a good mix of public officials as well as the private sector. So the idea is to try and sort of extract as much as possible. We listened to excellent presentation by Chaturanga. It looked like we are fairly stable and progressive. But I have few questions to Chaturanga as well. This is your forum. I'm keen to sort of engage with you. You might have better questions because you all are investors. So I hope you will use the Q&A time to sort of raise some of the questions. What I'll do is I'll ask a round of questions to the panel, and then maybe I'll sort of in between open it up so we have some audience feedback on the subjects that we just discussed. Chaturanga, excellent. Thanks for that clarity in terms of where we are and where we like to head. A common perception is that yes, things have stabilized, things are growing. We haven't seen the investments, the FDIs that would. I mean, yes, we have the best macroeconomic fundamentals ever, but we haven't seen a corresponding rise in FDIs. How would you explain that situation?
There are a few things. I think if you really look at the FDI's trajectory, we have never been strong. So on average, we've got about 800 million USDs per annum, like on average. So there are a few things why FDIs don't come to Sri Lanka. So until we fix this, FDIs won't come. So number one is the political stability that we continue to have. Now we have it. So they are watching it. And I think top it up with the credit rating increase, we will get a great visibility to the country. The second piece was that Sri Lanka did not really connect to the globe. So as a small country, the only way to grow is that you integrate with the local, close by markets, which is India, East Asia, So we've never did those changes, reforms for FDIs to come and set up here. For example, I'm just giving a very simple example. The current tariff policy is going to get rid of para-tariff and make imported raw material very less taxed. And that will allow competitiveness in exports. So if you really did that 20 years ago, we would have had the boom in export. So FDIs would come to those kind of countries to set up. And the other piece is the policies and governance. Now, if you really take Sri Lanka was at about, I think, the bottom quartile of the corruption index. And ease of doing index, I think we were at 99th place or something, right? So how would FDIs come? I mean, FDIs won't come to a country like that. So slowly we are changing the structural reforms that I was mentioning. So I think compared to 2024, we are getting a momentum. But for us to get to where we are, we need to have absolute clarity beyond the act that we have brought in for Investment Promotion Act, which is very clear. But then we have to have a very good land policy. How an investor would get a land, what kind of investments you would invest, what kind of support the government will give, and how fast it's going to happen, and how many markets that you can access out of Sri Lanka. So even though we have enormous potential in various sectors, FDIs did not look at Sri Lanka because we were not globally connected and our government policies and processes were not so sound. I think with those things coming to play, we would see a similar interest like what Vietnam or Middle East or South Korea got when they did their transformations. So we are very hopeful. So you wouldn't see like a high growth like the stock market after the election, but you would see a gradual growth in FDIs. Just to give you some glimpse of it, so our funnel is very big. Even now, for the last year, we have got a lot of inquiries. 1.9 billion worth of agreements have been signed at the BOI, and the port city has also got about a 3.9 billion worth of a funnel. So out of that, 1.2 billion is crystallized for 2026. So there is still momentum, and with more confidence coming in as politicians, as long as we don't intervene in the process, I think there will be more confidence. So if you really look at the historical evidence that we see, I've been in the ministry for 1.5 years, many investors have told me how tough it was to get things done, and that they had to meet the minister or the relevant minister, and that discussions ended with very unhealthy demands. So most of them are happy now when they are coming and talking to us. We continue to tell them not to meet us, but go through the process. If the process is stuck, we will step in to help them. So I think these changes, both politically and policy-wise, will bring FDIs to Sri Lanka going forward.
Excellent, thank you. Just to ensure that this momentum is sort of persisted with, and there's delivery of 5% growth, you mentioned that you all were continuing with the reform effort. Good to know that the business registration is being amended. One of the bottlenecks is the old customs law. Any progress on that?
Yeah, I think customs will go through a reform. So not only customs, I think most of the some are running on ordinances, some are running on old acts. All these will either made amended or some will have to repeal. So I think I don't have enough detail to talk about the Customs Act, but the customs is going through a reform, a huge digital transformation, a process transformation. So that's why we are seeing a lot of improvement in revenue collection, but the real requirement is as we get the single window for trade, and customs will be a big part of it. So I think the changes that are expected by the industry is not only in discussion but being executed in some form. So it's a matter of time. So I think EDB chairman can also add to it. Reforms are on process, but unfortunately some of these changes are not visible until it's done. So a lot of changes, lot of discussion, lot of adjustments are taking place even as we speak.
Thanks. Mangal, I'll move on to you. Maybe you can also expand on what Deputy Minister mentioned on the custom side, but there is this export development plan for 2030, which envisages about 36 billion worth of exports. From what sectors are you envisaging a lead up to this such a large figure? And in terms of are there any ongoing measures to really get those sectors aligned to this growth target?
So thank you, Ista. And also, first of all, I want to thank Rohan, Chairman Kisiris, and the LOLC Group also inviting EDB to part of this panel. And also, I am also very much proud that I am also representing the group as well. So basically, when you look into the export diversification, first of all, I think for the investor side, you are very much keen to learn about what is the Export Development Board. So therefore, I will just explain about the EDB. Then I will go to your question, Star. Basically, EDB is the premier organization promoting and developing the export sector in Sri Lanka. So we are from 1979. That means last 46 years. So we are developing the export sector in Sri Lanka. So we have our primary goal, mainly basically scope based on the policy advisor role to the government, mainly for the export sector. And we have to promote our export. Then we have to give them relevant knowledge service. Then we have to monitor the export sector in Sri Lanka. Based on that, we have been working with the many stakeholders. So currently, we are under the Ministry of Industries. So under the Ministry of Industry, Minister, Deputy Minister and Secretary. So we are working toward the 26 billion export revenue by 2030. So basically EDB, so we have to work with the 360-degree institution, mainly not only the Sri Lanka. So we have to work with all the foreign missions in overseas, foreign missions in Sri Lanka, all the ministries, all the finance organization, diplomatic organization, so all the district secretary, divisional secretary. So likewise, we have been working all the 360 stakeholders. So when you come to your thing, now when you look into Sri Lanka export performance in last year, so we were able to reach 17.3 billion export revenue, as Deputy Minister explained. So that means merchandising export sector, we have reached 13.5 billion export revenue, and the services sector 3.7 billion, together that 17.3 billion. So compare with last 10 years, for your information as an investor, you would like to know, because when you look into Sri Lanka CSE, there are 289 listed companies available. So out of that, 40 to 60 companies, that means more than 20 to 25% representing export-oriented listed companies are here. So when you look into last 10 years export data, so we have seen that nearly 1 to 2% export growth is there, for your information. In 2015, our export revenue was almost 13.98 billion. So when you come to the 2017, you can see the same figure, 15 billion. And we are coming to the 2023, we can see the export revenue was 15 billion. So that means during last 10 years time period, we are in the level of 14 to 15 billion export revenue. So that the government target to bring this 14 to 15 billion to 36 billion. So then you can see that how the EDBs, how the Sri Lanka export sector is going to 36 billion means from this year onward, so you have to generate more than 10 to 12% export growth. So as Minister clearly mentioned that last year we reached 6% growth. So this year, so already we have reached 13.7% from the January export data, 1.5 billion already we reached. From the merchandising service sector, both sectors we have reached more than almost 10 to 12% growth. So when you are planning to 36 billion export revenue, so definitely we need to diversify export. So that is why EDBs, we are concerned about the new export development plan. So the National Export Development Plan is a strategic initiative strengthening Sri Lanka's export competitiveness and sustainable economic growth. So based on that, we have 3 key objectives with the new plan. One thing is enhancing Sri Lanka's trade competitiveness, expanding our regional and global market linkage, and promoting sustainable economic growth. So those are the key objectives we are expecting with the National Export Development Plan. So with that, during last 8-9 month time period, we have been working with the Sri Lankan export community, export association, ministries together, support of the Asian Development Bank. And now we are in the final stage of the National Export Development Plan. Hopefully by April we will be able to launch this. So with the National Export Development Plan, our target is to diversify product diversification as well as market diversification. So mainly target is to get the share of export sector from the total GDP from 19% to 25% by 2030. So right now we are in the level of 19%. And also SME sector contribution Also, we want to get the to the 25% by 2030. So right now, we are in the level of 8%. So with that, we have identified new sectors. So mainly for the product diversification beyond our traditional export, mean that mainly for the apparel, tea, rubber, coconut, we are going to go ahead with the new sectors like auto component, very much sectors we have identified with the global market. So we are having the very much potential. So then we are going for a mineral-based expansion, the new value addition expansion, that is a new sector we have identified, electrical electronics, and the food and beverage, and the Sri Lankan spices, gem and jewelry. Then those sectors will be the priority sectors we are identified for the next 5 years, while we are further expanding our existing sectors. So those sectors we are expecting very much remarkable percentage coming next years. To get that 10 to 12% growth, definitely we need the market diversification. So that is why other option is the market diversification. So we are going for a market diversification. Everyone knows that Sri Lanka, our export, 25% going to the USA market. So other 23% going to the EU market. So when I went through your percentage, we can see that last April, stock market came down to the very low level. Because of that, we know that ECS is a very much volatility market. If there is something, we can see that very much red colors from the stock market. Reaction is very much fast. Your reaction to the export CSC. So last year, 25% represent from the CSC market. I'm sorry, USA market. So therefore, we want to diversify our export into the other market. So we have seen very much potential for the African, ASEAN, and Middle East countries. So then we are diversifying those countries as well. So when you look into the last year export performance, we can see that African region more than 46% growth, Middle East region more than 25% growth, even ASEAN countries too. So therefore, if we want to diversify to the other market region, therefore there is a FTAs is very much important. So Sri Lanka, so we are right now we are having the FTAs. I think still our private sectors, they don't know about this. So that is why this last Monday we had the a CEO forum from the private sector organization who are not in the export market. So leading companies we invited. So most of the companies participated, including LOLC Group too. So then we explained about the potential of the Sri Lanka, because as Minister clearly mentioned that GDP growth, tourist income growth, our last year FDI, we reached 1 billion level. So with the now FTAs, you know the Sri Lanka, India, we have the FTAs, but right now we are not getting the maximum potential. So when we are exporting 1 billion to the India, we are exporting, so we are importing again the 4.3 billion. So Pakistan, Sri Lanka FTA we have. So again, we have the APTA and the SAPTA, and the very recently, now we are going to be in the final stage for the RSF. So with that, Sri Lanka will be covering more than 15 countries. So EU countries, we have the GSP plus, so that we can export to the EU countries with the zero tariff. And the very recently, UK, January 1st onward, UK DCA scheme. So with that, we can export to the UK with the zero tariff. So even Australia, it is coming to the 1 to 5% tariff to the Australian market. There are huge potential. And the very recently, Japanese, they have signed the agreement with Sri Lanka because they want to come to Sri Lanka. So based on Sri Lanka, they want to export to the Indian market, African market, and Middle East. So we have seen that how Japanese companies invested in India. When you look into the last 5 years time period, we can see 45 billion approximately they have invested in India. So when you look into Sri Lankan side, they have invested only 350 million. So Japanese investors, they want to come here, invest here. So based on that, they have to expand. So that is why Sri Lanka now other infrastructure facilities, including FDI plus our BOI zones. Right now we are in the 17 BOI zone. We requested government to establish another 5 to 10 new BOI zones based on the product specific BOI zones. That is also in the pipeline. So this year we can see that the other transformation policy environment, including Minister mentioned about the national tariff policy plus trade national single window. This is one of the key things we have to initiate. Why the trade national single window is very much important, because we have been discussing this many decades, but this year government already allocated 2.5 billion for the this trade national single window. So already team is working towards this target. So most of the government institutions already now they have implemented this digitalization process. So initially they will digitize a custom. So with that, all the government institutions, including custom, import control division, and other key relay institutions will be interconnected. Then as an investor, as an entrepreneur, and the exporter, so you will get the relevant approval within a short period of time. So we are dragging this process. So that is basically the idea of the National Export Development Plan. Okay. So with that, Mr. This year from onward, we are expecting 10 to 12% export growth is there. So when the next question, I will explain further.
Okay, thanks. Excellent. Asank, I'll move on to you. I'd like to get a, because the discussion is more on the macro, the outlook, how it sort of pans out to be. But from your perspective, what is your assessment of the economic outlook for this year and maybe next year as well?
I think the Deputy Minister stole my thunder on that, so I completely... Deputy Minister stole my thunder on that, and I was wondering what to say. I think the reality is when a country runs through a twin deficit, it's asking for trouble. And Sri Lanka is not the only country who has fallen into this trap. If you go to late 1990s, you had a spate of countries in East Asia, including Philippines, who suffered from this. Now what has happened is we are running a twin surplus. Twins, that means a current account surplus and a fiscal surplus. And I'm not going to, I don't want to harp on what the Deputy Minister said, but I want to add one layer to this conversation. The macro policies which is leading to these twin surpluses is now legislated. You have the Central Bank Act. You have the Public Finance Management Act. You have the Public Debt Act. And you have the Economic Transformation Act. So that means it's legislated that central bank cannot print money and fund the fiscal deficit. The key fiscal targets are legislated. So the moment you breach the target, it becomes illegal. It's a very, you breach it even slightly, from then on the executive actions become illegal. And the public debt is managed by a separate unit. Now, all these pieces of legislation, you won't find anywhere in any of the frontier Asian economies. You might find one or two of them, but not all of them. So we have a very well-articulated legislative framework through which these prudent macroeconomic policies are driven. So I want to keep to the point and keep it short. So these twin surpluses are likely to be sustainable, and they have been tested through election cycles, and they have also been tested by economic crises like the DITWA. So therefore I fairly remain confident that it will continue, and as long as it continues, the interest rates will remain low, which will actually ensure the real economic activities can grow. And with that, the corporate earnings, and with that, obviously, the equity markets.
Okay, just a question. We did have mid-year fiscal. We had a previous legislation which made government to stick to a 5% deficit, which never happened. Will this be the same thing, though it's not legal? Government will have an excuse going forward.
So it actually boils down to what the society believes in, right? And I think if I remember, when it came to that 5% target, there was a lot of conversation that it's going to restrict the country from achieving growth targets. And I think in a sense, this society and the political leaderships of coming across different parties witness the mistake of not sticking to that. So just like after the Second World War, that few generations remember the atrocities of the war and therefore was committed for global peace, I believe for a while at least, irrespective of political parties, political leadership and the societies may remember the economic crisis and therefore stick to it.
Okay, excellent. Shahan, I'll just go on, continue with the outlook story. I mean, what sort of, how bullish, or what's your own view, and what factors sort of support your view in terms of the economy?
Sure, I think. From the equity markets perspective, after the economic crisis and the revival of the economy, we saw continuous economic fundamentals improving, and with that, we see the stock markets leading the price adjustment. So we saw 3 years of continuous growth, and we are seeing all-time high stock markets in terms of the market indices. With that, always you come to the conclusion whether the market is high and whether the valuations are too expensive and whether there's a correction due. But as we look at the overall fundamentals and the macro stability, what we see, the stable economic outlook puts the foundation. So though the prices have picked up significantly from the bottoming out, kind of a bottoming out with the economic crisis, still, if you look at the underlying earnings growth, we see significant earnings growth. And if you look at the research presentation, if you look at the multiples, price to earning ratios, it has been more or less stable last 5 years. Your price to book value probably has gone up slightly, but the profitability level also parallelly has gone up. So that reflects the companies are leveraging on the macro stability, low inflation, stable external sector. So we see as a stock exchange outlook, we see still, despite the significant growth in terms of pricing, we still see there's an upside because of the stable environment, and probably like what the minister was alluding to, potential credit upgrade, there would be further adjustments for the pricing upside. So we see there's still upside remaining for the market. Yeah.
Thank you. On that note, I'd like to open it up to the audience on just any questions you have in terms of policy direction, the kind of confidence level, or issues that you feel that there is some of the policies are not really addressed. Any questions or interventions from the audience? As I said, I'm very keen to sort of make it interactive. Let's learn from each other. Please raise your hand, and it can be an observation or a quick question. Chaturanga is ever willing to take any question.
I think I explained all, so there's less question.
There is one question here. Yes.
Thanks, and my question is to the Deputy Minister. Just a quick one, because you spoke about the confidence around the growth for this year, and you believe that the growth will still track quite well despite the impact of Ditwa, and you've had about a couple of months to assess the potential fallout from Ditwa for this year as well. So my question's around, immediately after the cyclone, there was a supplementary budget estimate by the government which said that there might be an impact on the primary surplus, and you would have to spend extra on reconstruction. What are your views around that? Do you have to probably renegotiate any terms with IMF for the targets for 2026, be it the primary balance, be it the reserve building for this year? And how confident are you in terms of the primary balance continuing? Obviously, I think 2025 was phenomenal. I think it was way above target in terms of what was achieved. How confident are you in terms of this continuing into 2026? Mainly because of the fact that we have a lot more global uncertainty this year, and because of the fallout of Ditwa. Thanks.
Yeah, I think the reason for primary surplus to have was that to give a discipline between revenue and expenditure, right? So that was the purpose of having it. And the IMF agreement also has a contingent clause at a time of a crisis. Can the expenditure go beyond 13%? So we've used this, so already, so it's been negotiated. So the 500 billion that we are spending is out of the 1 trillion excess cash that we had. So there is no impact on the 2026 budget. So 2026 expenditure will go, but there will be no impact on the primary balance because it's coming out of the cash that was pushed from 2025. And at the same time, even with the Ditwa reconstructions, we will still stick to the budget which was presented before the crisis. So I think that is the confidence we have. And within the budget, we can handle it with this 500 billion excess funds, and then we are actually collecting additional funds or the Ditwa fund, the rebuilding fund. So at the moment, we don't see any risk of deviating but surpassing. And we are also confident that the revenue targets we will go beyond because it's a very conservative revenue target we have. The changes you are seeing on the legislations that are coming through, like, for example, if you're buying a house, buying a vehicle, registering a company, you need to have a TIN, and then you are basically bringing the people who are not part of this tax structure inside the tax structure. So we would see a further growth in the revenue side. So yeah, I mean, we are very confident with that, and let's focus on the 2026 budget. And what we want to do now is, last year we spent about 72% of the capital budget. Even though it's 72%, it's the highest in the past decade. But this year we want to reach close to 90% or more. So that's also going to drive the GDP as well. So 500 billion additionally coming into the GDP, and then another 1.3 trillion coming in as capital expenditure. I think that itself will drive the GDP a notch higher as well. So I think we can be very confident that the government will stick to 2026 budget.
Thank you for that question. Anyone else? Yes, sir. Okay. And there are 3 questions, all on the right-hand side of the.
So my question is, one question is to the minister. So in terms of the Ditwa-related reconstruction work, in terms of timeline, when do you think the real executions will start? That's for you. And for Mr. Mangala, in terms of the exports, particularly we saw the coconut-based exports had done quite well. So for my understanding, in terms of Ditwa, were there any destruction to the crop? And how are you seeing the coconut-based export trends this year?
So I'll answer on the timeline. So basically, our priorities are on the infrastructure. So so the rail network and the road network is getting prioritized. I think electricity we are fully restored. So it's a few roads we have to do and few rail tracks. Apart from that, we are very much focused on rebuilding houses for people. So we have to now do about 30,000 this year. So whatever that's been damaging the economy in terms of infrastructure, we believe that by end of this year, most of the things will be done. So the delays in the housing construction and all that is due to land issues and MBRO reports not being available. I think those things will be done. But just before Mangala speaks, from Ministry of Industry's side, we didn't see a huge impact on a particular industry per se. The agricultural industry, you know, it's seasonal and everybody has started, all the crops are up and running. So other than the large industries which were by the river banks, there is no significant impact on the GDP. So as a number, we have 256 mid-size factories that's been partially or fully damaged. So we are in the process of rebuilding. The problem is the insurance piece. So government is intervening with those industries with the support of large industries to build them. But from a timeline, I think from the DITWA impact, we would say by 2027, we would be fully recovered, other than the lives that we lost.
I think there's some more questions here. Mang, sorry. Yeah, sorry, Mang. You can, I thought.
So regarding your question regarding the how coconut export impact to the DITWA, basically, Minister also mentioned that now when we did the survey and we already got the information too, nearly 350 exporters impact with the DITWA, but when we went to the in detail, I think very less impact for our sector, because when we are categorizing our exporters in the district wise also, some less impact for our sector. And some impact for the food and beverage plus spices plus coconut based product also. So therefore we can say that 1 to 5% in between impact was there. But when we see the numbers, export numbers for the month of December plus January, even January month export performance from the coconut sector nearly 18%. So last year, you know that the first time in the history coconut based export we reached nearly 1.2 billion. So compared with the 2024, we can see that more than 22 to 25% growth. So same numbers from the January month also we have seen the good performance. So therefore this year we can see that less impact for the coconut industry. But the demand is huge, because when we are producing 3 billion nuts, normally we are using the 60% for the domestic and the 40% only for the export expansion. But this formula should be changed, because we are having the good demand from the coconut based product. So that is why some of the companies in Sri Lanka, they went to the Indonesia too, because otherwise they are unable to meet the requirement. So hopefully the coconut based product, we should have some other alternative also. Ministerial we are discussing. So sometime we have to import some of the raw material and the export sector. So we are working towards that target, but there is a huge potential for the coconut based product.
The question is for Deputy Minister. Hi. It's a specific question regarding the proposed Investment Protection Act. Would you be able to share some color on what the government is planning to address through this act?
Unfortunately, I don't have too much detail to it. It's basically, now we have different investment protection acts bilaterally with multiple countries. So this is going to give a holistic view of the investment protection to any investments. So I don't have the details to share at this point. I'm sorry, because I didn't see the draft or the bill that is to be come. But generally the idea is to ensure that apart from the Investment Promotion Act, coupled with the Investment Protection Act, so that the policy changes of government will not, the consequences of policy changes will be looked at for the investments which are coming in. Because traditionally, unless you had an Investment Protection Act with that country, the government policy changes were not really looked into, and the investor had to bear that. So that is the big piece about it. And the other piece is the protection that legally a company would have beyond a BOI company. Now currently there's a way that the BOI companies are looked after, but apart from BOI companies, other companies are not covered. So these are the two things mainly, but I wouldn't be able to share more than that.
Yeah. My question is also to the Deputy Minister. Sri Lankan Airlines has been a huge burden to Sri Lankan government and to the Sri Lankans, all the Sri Lankans as a whole. So how this problem, so it's slowing down Sri Lanka's prosperity and growth. So what is your view on how this problem should be solved, and what is the, how government is poised to solve this problem?
So I think Sri Lankan Airlines, our policy and our need is to have a national carrier. So we are not deviating from that. So we are doing our utmost best to recover Sri Lankan Airlines. So the team has given a 3-year plan, and the government has given a kind of a cushion, 100 billion rupees to revive over a period of time. So there's been debt being taken over. So we are looking at the operational performance of the Sri Lankan Airlines, because asset is at this point it's very much undervalued. Even we go for a investment partnership, last time it didn't crystallize. So what we are trying to do is now to make it better operationally, make it better financially, and probably for expansion purposes we might have to go for a partnership. But we are not willing to lose the brand. This is the only thing that we have as island nation, and this is the only flight that has direct flights to certain locations even today. Because Sri Lankan Airlines is flying directly, we have some level of connectivity. So we don't want to lose our slots in the world and compromise the national carrier. So we are looking, even though we look for a partner, that would be a partner mostly a financial and operational end, to ensure that we can carry the brand and the tourism support that we are giving. So it's a very strong negotiation. But for us to negotiate strongly, we need to get the operations stronger. So that's the government's current strategy, and we hope it will work. If it doesn't work, we will have to call the shots. But I think the whole strategy of the government is to have Sri Lankan as a national carrier.
Yes. Thank you. This question is referred to the Deputy Minister, Honorable Minister. With global oil prices and shipping costs rising again due to tension in the Middle East, how is the government planning to protect the cost of the living of the nation and the rupee stability without sticking on to high-cost borrowings? And based on your remarks, I would like to hear something from Asanga also. Thank you.
Right, so I think this is an inevitable situation. So the oil prices generally shoot up when there's something happens in the Middle East. So at this point, we don't have any lever to discount, and that is a policy that we have moved out of it. So everything will be cost reflective. As a society, as a country, we will have to bear it, and it will put pressure on exports because export competitiveness, but that will be felt across. So I think we would see a spike in inflation, and since we are still below the target, so we are pushing the central bank to bring inflation to 5%, and we are still at 2% or less. So I think the fuel prices play a huge, because the reality we all need to understand, even we talk about inflation, the Sri Lankan inflation is mostly supply side. It's not a demand side driven inflation. The central bank has one tool to manage, that is the interest rate. So they have brought it down as much as they can, but the inflation is not picking up, because inflation is, in Sri Lankan inflation is highly planned for, highly pushed through the supply side, mostly fuel prices. So as you correctly said, this will push up, but we don't see it will have a drastic impact on the inflation target. So maybe it will hover around 5 to 6%. So we have to, I think the president also mentioned that the central bank has given 3 scenarios yesterday. We are yet to see that report. So, but as a whole society, we might have to take the brunt of this, short-term shock, because the energy will be cost reflective, electricity will be cost reflective, and we don't want to deviate and go through the route of what other governments did. And just want to clear, the policy is this, right? We will not allow CEB or petroleum to give discounts. That's the basis. If certain communities having hardships, government will give direct incentives to those sectors. For example, if we can figure out some cash from our extra collection and we can support the fisheries industry, we will do that. If we feel the prices are too high on a particular sector for a particular community that deprive them of consumption, we will support them. We will not give subsidies through the institutions. So that's the base of it. That is where we fell off. So I think that is a strategy. So if things go beyond our control in terms we don't know what's going to happen, so government will relook at its expenditure. So that is the only thing that we can do, because we have planned huge capital expenditure for this year. So obviously we will have to reallocate for operational. So I think that is to ensure people are comfortable. So government will take those decisions based on the variables that move. But policy is very clear. How we take decisions are very transparent.
Asanka, you like to just quick response?
This also goes back to.
Yeah.
So this actually goes back to a question you earlier asked, the 5% budget deficit, the fact that we veered away from it a while ago, will it happen? So, I mean, going back to the Deputy Minister's comments, as an investor, there are two key variables I will always watch: the fiscal deficit or the primary surplus and the current account surplus. So essentially what we are hearing from the government is, even if the crude oil prices go up, they will stick to the prudent policy of ensuring this cost reflective pricing. And when the cost reflective pricing happens, none of the state-owned the two key state-owned enterprises will not suffer losses. It will not expand the fiscal deficit. That means the government will continue to stay away from the credit market. And when the government continue to stay away from the credit market, interest rates will remain low. And when the interest rates remain low, it allows the real economic activities to pick up. So while that inflation caused by the supply shocks will have some impact on corporate earnings, some impact on the disposable income, when the supply shock goes away, we'll be able to revert to the normalized levels much faster. If you veer away from it, you actually build up public debt. It's a lot more tougher to unwind that public debt. So for me, hearing the fact that we will not move away from cost reflective pricing is the biggest positive in terms of economic outlook for the country. And also I want to add one last thing on the crude oil price. See, if crude oil prices stays at $100 this time, it's not a sustainable equilibrium. Usually when it goes to $100, the Middle Eastern countries do well. But this time it will touch $100 without Middle Eastern countries being able to produce. So Middle Eastern countries survive on crude oil, tourism and logistics. Then you have the US economy. President Trump is heading into midterm elections. He cannot afford higher pump prices as much as us. So this $100 or above crude oil prices, logically thinking, is not a sustainable equilibrium. It can go above, it may go above, but the game theory suggests something has to give in for it to come down.
Just to quickly add, I think the fuel prices are more impacting the Western economy than us. So they are not going to risk this. That is why you see Trump himself saying on the Hormuz, Hormuz trade, that they will give protection to tankers, because they know if the oil prices shoot up, the problem is not Iran, problem is US itself. So I think we have some level of leeway, and I think we should not be naive. We are ready for it, but as the President clearly said, we hope for the best, but we are ready for the worst.
Thank you. Yes, there is one.
Will mitigating this current problem, will it have any impact on Ditwa rebuilding, or will we have to think of it?
No, I think the current situation, if at all, is going to impact Mr. Mangal. That's our exports. and we will have a higher import bill. So it will play on the reserves. Nothing is going to come to the fiscal side. I mean, to be really, so there is a component of imports in the rebuilding. So that will also go up. So what we can say is if it really shoots up and get worse, probably 10 to 20% of the rebuilding will have to push to the next year. That is it, because, but what I'm still affirming you is that we will stick to the budget. So if we really want to cut certain expenditure which we have planned, but the priority is the DITA rebuilding, we will do that. So government has the ability to, reprioritize the expenditure in 2026 budget. So that's what I'm saying. So if something goes short somewhere, we still have the framework to readjust and not to borrow beyond what we have planned, not to trouble the debt market, so that again now interest rates will shoot up. So I think those are the two fundamental variables, again as was mentioned, that we will look into. So yes, there will be impacts, but we have the room to manage.
In addition to that, 1 minute text regarding the impact for the export sector, Middle East crisis. Middle East represent from the total export 6%. 6%. Out of 6% even mainly for the tea export. For example, now last year we exported nearly 1.5 billion worth of tea export, and the Middle East region they represent nearly 530 million, 35%. So that means that impact may come for the month of March or April based on this whole situation, but not for the other product. So that is why this month also we are expecting nearly month of February anyway no impact. There will be another 10 to 12% growth should be there. For the month of March, we are expecting nearly 10 to 12% growth, but with this situation, sometime there may be an impact for the in between 1 to 4%. Right now we can't say because of only the 2 days, 6th of March, we'll see the situation. Mainly impact for the tea industry.
Okay, thank you. That was excellent. I have a sort of wrap it up because we're behind time. Quick questions and also quick answers in terms of responses. Chandrang, just one question. I know you spoke about reforms, you mentioned about education, energy and all that, but we have seen in recent months that there is resistance from the employee side. People thought NPP coming will ensure trade unions will be silent and supportive, but energy, healthcare, education, I think there will be some more coming up. How are you managing that challenge?
Politics. So basically, it's about people. So what we are posing is a transparent process of transformation. And thus far, each of the ministers has been able to communicate what we are going to do and how we are going to do and how it's going to benefit to its employees. And thus far, we've been able to manage. But we would see resistance from pockets of resistance coming from two sides. One are people who don't want to change. So for example, when there's so much of corruption in a particular area, that team will resist digital transformation, right? So that is given. And when there's political influence, that is not from our party but from opposition, they will also make a noise because it's politically beneficial to kind of rattle the government. But what we are seeing is none of these reforms are brought in by the government because we have already given a policy book. We are not doing anything beyond that. So that policy book has been written and mandated by 70% of the people. So we are going to go for the change. And I'll give you one simple example. There was so much resistance at the, this is a classic example, use case. Sri Lanka Post. that they don't want to put the fingerprint. What was the expectation? That the unions will strike, opposition will come to street, and that we won't be able to get the fingerprint thing done. Now what has happened? Fingerprint is done, and huge investments going into the reforming of, betterment of the institution. So this is a give and take. And another strategy we basically used is, some of the smaller corruptions are due to government servants or public services not paid well. So now we have given a foreseeable 4-year increment. So every year there's an increment. So it's a give and take. So I think our party has that ability to, be more empathetic and listen to people and to understand their pains. And I think majority of Sri Lankans are good. So therefore, we would see that these reforms are going to we will be able to do. There will be resistance. We don't say no, but we are very firm on what we want to do.
Okay, thanks. I'll wrap up with Asanka. We had 40% growth in the last two back-to-back 40% plus gains. What you think is the bull run over, or 2026 will continue to be the roller coaster third year?
I mean, this can be a long discussion, but I'll keep it very short. But if I look at our coverage universe, or our investable coverage, we look at business volumes. I think in almost most of the industries, volumes have merely gone back to what it was in 2017. So really, that what we missed out because of the crisis, the growth, or the structural growth that should come through is yet to be reflected on the earnings. When a country goes through a period of hyperinflation and recover, the market capitalization has to go up because inflation alone drives the earnings. In reality, the business volumes haven't really grown. So while I don't like to predict the index movement, I think there will be sufficient number of companies which are likely to report about 20 to 25% earnings growth over the next 12 months, where the investors can position themselves to have a strong portfolio of strong equity returns. I think that is my response to that.
Can I add just a quick one? I think if you really look at year-on-year growth, if somebody is expecting a 40% growth next year, you are a short-term investor. But what my request is to invest in the long run, because as you correctly said, we are not reflecting the earnings, and obviously the growth trajectory for each sector is high in the longer term, next 5 to 10 years. So if somebody is really looking at to gain, I think your gain is going to come over a period of time. And if you really take the construction sector, which was down, and government itself is pushing out 1.2 trillion turnover to that sector itself, right? So if I'm not picking a sector here, but at the same time, tourism is going to do the same, and the agri exports are going to grow more than 20%, but the adjustments will take place over a period of time in the stock market. So if you really want to look at whether 40 will come, I don't think that is how we should look at it. We should look at it from the perspective of the country is going to grow, and are you going to take the advantage of that growth through the stock market? I think that is how that need to be looked at.
Excellent. So thank you very much for the expert panel. They're very frank, I would say. Free advice, obviously, and it's like the focus is on the economic upswing, and I think there is hope of sustainable growth. 5% plus is fairly positive from a base of 5%, and I think, as the panel said, there are a lot of opportunities, both short and medium term. So thank you very much, and over to the and also thank you for the audience for making it interactive.
Thank you, gentlemen. Ladies and gentlemen, we will now proceed with the presentation of tokens of appreciation. So it would be great if our panelists as well as our moderator could remain on stage. May I now invite Mr. Kitsiri Gunavardhana, Director of LOLC Securities, to present these tokens of appreciation this evening. First, Honorable Chaturangabe Singha, Deputy Minister of Industry and Entrepreneurship Development. Now, Mr. Mangala Vijay Singha, Chairman and Chief Executive Officer of the Export Development Board of Sri Lanka. Next, Mr. Asanka Herath, Chief Executive Officer, Unit Trusts and Head of Equities at Linear Wealth Management. We were also joined this evening by Mr. Shahan Bartholomews, Chief Executive Officer of LOLC Securities. And of course, our moderator for this evening, Mr. Nistar Qasim, Chief Executive Officer and Editor at Daily FT. Thank you, Mr. Gunavardhana, and thank you, gentlemen. Ladies and gentlemen, we now invite you to stay connected with LOLC Securities. Please take a moment to scan the QR code that will be displayed on the screen in just about a bit, and this will direct you to all the official social media platforms of LOLC Securities, where all the market insights, research, as well as updates will be put up here regularly. Thank you very much. Ladies and gentlemen, continuing with innovation and digital engagement this evening, allow me to now invite Mr. Malintha Thirimanna, Research Analyst at LOLC Securities, to introduce the LOLC Securities website as well as research platform. We are also proud to note that LOLC Securities was honored with the Silver Award in the Best Finance and Insurance Website category at the Best Web.lk Awards for the year 2025. Ladies and gentlemen, I must also highlight that the access to this website is entirely complimentary, not only for the clients of LOLC Securities, but also for anyone who is seeking credible as well as timely market intelligence. And through this platform, LOLC Securities is committed to delivering research-driven insights and ensuring that all stakeholders remain informed, empowered, and aligned with the latest developments that are shaping the market. Over to you, Mr. Thirimanna.
Good evening, ladies and gentlemen. I know that we're nearing the end of our program and it's been a long night, so in the interest of time, I'll keep it short. This last year has been one of growth for us here at LOLC Securities, and our new website, designed from the bottom up to keep up with an ever-changing industry, has been evident of that. We also believe that true market growth comes from information efficiency, and that there is no better way to enable that than to make sure that investors are able to easily access and consume research material in a timely manner. To aid that in our own way, we have integrated 3 new features into our website over the last year. The first of which is our stock lens. So if you go onto our website, you can access that by clicking the stock lens tab on the main homepage. Give me a second. So as you can see, this gives a breakdown. This gives a breakdown of key market statistics and valuation metrics, all of which are updated daily for your convenience. You can filter by PE, PBV, and by each individual stocks. And you can refer to this as a snapshot at the end of each trading day and keep ahead of the market. The second integration that we've come up with is our dividend calendar. So that, again, you can access by clicking the tab on our website. This has 2 parts to it. The first is the calendar itself, which gives you a list of all upcoming and previous dividends that have been announced. And you can get all the information that you would need regarding them. And also, we have our dividend tracker. So it's not very convenient to keep trawling through a bunch of dates and calendars and tables. So we've come up with this visualization that lets you see when companies have announced their dividends and how much, going back to the previous 5 years, as you can see. And you can also filter for the companies that you need and have all the information you need at the tip of your fingertips. And also, the third main one is we've also added this research tab to our website, and you can get recurrent reports, corporate reports, sector reports, and pretty much any material that we come up with, we'll be posting it on here. So I invite you to stick with us and keep up to date as you go on your investment journeys. We also have future plans to extend our functions going forward. So we invite you to stay tuned. And we hope that this will aid you in your investments, and we wish you the best. Thank you.
Thank you, Mr. Thirimanna. And to formally conclude today's proceedings, may I invite Mr. Rohana Chandrasiri, Chief Operating Officer of LOLC Securities, to deliver the vote of thanks.
Good evening, ladies and gentlemen. Now we have come to the conclusion of today's investor forum of LOLC Securities. So it's my privilege to deliver vote of thanks of LOLC Securities Investor Forum. So first, I would extend my sincere gratitude towards our distinguished panelist, Honorable Minister Mr. Chaturanga Abesinghe and Mr. Mangala Vijayasinghe and Mr. Asanka Herath for their valuable insight sharing with us. So actually, again and again, I thankful them. Actually, we had a very comprehensive, thoughtful insight they delivered than we thought initially. So next, Mr. Nissa Qasim, the moderator of the day, special thanks goes to you for guiding discussion to professional and made very comprehensive dialogue. And next, I would like to express my gratitude to the Director of LOLC Securities, Mr. Kissiri Gunawardena, and our CEO, Mr. Shan Bartholmeus, for your leadership and full support and full gratitude towards LOLC Securities Limited. So next, I thankful all our senior staff of LOLC Holding, their guiding and their support for this event and LOLC Securities as well. Next, and our valued clients, our presenter, and all our guests, thank you very much for your participation and your participation towards this event to make it make a reality. And my appreciation also goes to the entire LOC team of LOC Securities, your dedication and hard work behind this event. So finally, we extend our heartfelt thanks to each and every one of your continued support and interactive engagement. Your involvement made this event both meaningful and successful. And our valued clients, our presenter, and our other invited guests, and our media team, thanks for covering this event. So finally, we will extend our heartfelt thanks to all of you who take in our invitation and make presence here. So now we warmly invite you to join us then a cocktail and dinner and continue evening with the pleasant conversation and fellowship. Thank you very much. Have a wonderful evening to all of you.
Thank you, Mr. Chandrasiri. Ladies and gentlemen, thank you very much for being a valued part of the Investor Forum 2026 brought to you by LOLC Securities.
In the world of investments, trust is earned. Success is built on insight, discipline, and strong partnerships. At LOLC Securities Limited, we don't just participate in the market, we help shape financial success. As a fully owned subsidiary of LOLC Holdings PLC, our journey began in 2011 with a clear ambition to redefine excellence in Sri Lanka's stock brokering industry. With 15 years of industry expertise, we stand today as a premier stock brokering institution in the country. Built on credibility, analytical strength, and enduring client relationships. With an expanding presence across Sri Lanka, including our branches in Kurunegala, Anuradhapura, and Mathura, we bring capital market access closer to investors across the island, connecting opportunity with ambition. Guided by a distinguished board of directors and driven by dynamic executive leadership, the organization moves forward with strategic clarity, strong governance, and long-term vision. At the forefront of our operations is our team of experienced investment advisors, professionals who understand that every portfolio reflects a purpose, whether it is wealth creation, capital preservation, or long-term financial security. As specialists in stock brokering and investment advisory, we deliver tailored portfolio management strategies aligned with each client's financial goals, risk tolerance, and prevailing market conditions. Regular consultations, timely market updates, and transparent performance reporting ensure that our clients remain informed, engaged, and confident in their decisions. Supporting this advisory strength is our dedicated research team. Through detailed market analysis, macroeconomic evaluations, sector insights, and structured valuation methodologies, our analysts deliver comprehensive intelligence designed to bring clarity to complex market environments. In capital markets, clarity drives conviction. Our commitment to excellence has been consistently recognized on both national and international platforms. Over the years, we have received multiple accolades at the CFA Capital Market Awards and global industry recognitions, reflecting our consistent analytical discipline and advisory excellence. Most recently, in 2025, we were honored with the Silver Award for Best Website. This recognition underscores our continued investment in modernization, digital accessibility, and delivering a seamless experience for investors engaging with our insights. A platform designed not just to inform but to empower. In today's fast-moving financial landscape, access to timely insight is critical. Beyond direct advisory engagement, we extend our research and market intelligence across multiple digital platforms with particular strength on WhatsApp and YouTube alongside Instagram and Facebook. We deliver real-time research highlights, market alerts and strategic insights directly to our investor network. Our strength lies in our people, professionals with deep market expertise, disciplined judgment and an unwavering commitment to client success. LOLC Securities Limited. Insight, discipline, performance.